I would wager that close to about 1,200 to 1,250 Indian companies actually have exposure to the particular bank, and that exposure would be anywhere within range about $2.5 to $3 billion on a gross amount itself. So all that money was actually locked up on Friday. I believe as of Monday, as of now, they do have access to their deposits, and most of these founders and these companies are actually looking to move their deposits to another bank. I think the short term impact is that the current management of SVB is also going to find it very hard to actually continue business as usual. I think they're going to be more concentrated, even unless an acquirer actually comes in and backstops the losses, guarantees all the deposit that's going to be there, calms down all the depositors of SVB. For that matter, I think SVB is going to see a fairly slow collapse where everyone's going to move money out in the immediate short term itself. But I think in this particular regard, the RBI should seriously scrutinize why are Indian companies looking to actually move overseas. I think if that actually happens, this will be a fantastic opportunity for India to actually succeed from the collapse of SVB, which is unfortunate. And in case we don't actually learn these particular lessons, then this thing will just be another footnote in the history of Indian startups where people just say it happened on a Friday, it got resolved on a Sunday. I don't think that a situation similar to 2008 in that regard, because 2008 was mass panic. This was SVB is unique in a bank because a large chunk of the entire depositor base is concentrated in one industry, which is startups. For that matter, startups have been facing headwind for a considerable amount of time.
Hello, this is Anna Isaac, and we're here to discuss the collapse of the Silicon Valley Bank. We're going to keep it very, very simple for those of you who are not hardcore business news consumers. So, for those of you who don't know, the Silicon Valley Bank is the United States' 16th largest bank, and it's the go-to bank for the tech sector, for startups and venture capitalists. But in a span of 48 hours, the Silicon Valley Bank suffered a major collapse, making it the second largest bank failure in US history. To discuss the story and a lot more is Siddarth Pai, who is the founding partner, CFO and ESG Officer of 314 Capital. Thank you so much for joining us today, Siddarth. I just want to start off by asking you, what led to the collapse of the Silicon Valley Bank, and why is SVB sort of the go-to bank for the tech sector?
Thank you very much, Anna. I think the answer, so banks have traditionally treated startups very, very harshly. The entire business model of a bank is contingent on getting fairly large volumes of business, large cash deposits, and their customers actually taking very large lines of credits from them. It's only at that point in time do these customers truly become valuable to the banks. Well, so if you actually look at a startup, a startup's a small company that's actually growing very, very quickly. So they may double or triple within a span of a year itself because of a fairly small base, and they become very aggressive in their growth. Now, most of these, and because these startups actually end up raising capital and actually burning a large amount of their capital to achieve growth, they may not be profitable. It end up actually failing most of the traditional models that a bank actually ended up having. So the founders of Silicon Valley Bank realized that startups are actually integral to the US economy. There is no proper banking solution that actually caters to them. And even though the business model is risky, if you actually look at it through a different lens, it is possible to end up creating a very strong franchise from this particular customer base itself. Actually become one of the 16th largest bank in the US, the largest bank for startups in the US itself. And I believe they've actually covered about 50% of all the US life sciences and technology companies, which is significantly large. Now, all this time, as you know, during the year 2021, especially because of low interest rates across the entire world, startups actually raised an immense amount of capital, especially startups in the US. I believe they actually raised about 250 to 300 odd billion dollars or something during an 18-month period during that particular time. Now, all that entire money raised, about $180 billion was actually deposited in Silicon Valley Bank. Now, when you deposit money in the bank as a customer, the bank actually needs to actually generate a return on that particular deposit. They do this either by lending that particular money out. Silicon Valley Bank lent out about $75 billion of that. And the remaining money was actually invested into government securities. Now, they are actually invested into 10-year mortgage-backed securities, which is a special class securities that's actually backed by a mortgage either on commercial property or house property itself. And the yield on that particular investment was 1.65. Now, unfortunately, what happened because the Federal Reserve raised the interest rate multiple times over, I believe the current rate is about 4.75 as of now, Silicon Valley Bank actually faced a problem. A large amount of their money was actually kept in a very low yield assets compared to the comparable yield they end up getting in the market, in the market as of now. And in 2022 happened, and 2023 as well, as we started entering into it, a large number of their customer base, which was startups, started actually withdrawing that money because capital stopped flowing into them. most of them had to cut down their burn. They started liquidating their deposits, whatever investments they had, realized the money in cash to make sure they could actually control their burn, or the amount of money that they spent, and conserve the amount of cash that they had. So there was a large amount of deposit pressure that actually started falling on Silicon Valley Bank. Because of this, these low yield investments, which they could have actually held for a period of 10 years, they were actually forced to sell that. So I believe on Thursday or Friday last week is when they actually sold $21.1 billion worth of these particular mortgage-backed securities for a loss of 1.8 billion. Now, at that particular point in time, the rumors started floating about that Silicon Valley Bank could not actually make good on the deposits that were there, and it became a sort of self-fulfilling prophecy in the form of a bank run. So a large number of the depositors went to SVB asking for their money back, forcing SVB to sell a larger portion of their investments that they made at a loss. And the moment the news actually got leaked that they sold at a loss, a large number of people panicked, went to the bank to try to withdraw their money. I believe by the end of Friday, Silicon Valley Bank actually had a deficit of about 958 billion. Now, on a balance sheet of 210 billion, 958 million is not the largest amount. It's a fairly small amount compared to the entire thing. But just because of this asset liability mismatch, short-term deposits invest into long-term investments, and the pressure when the depositors ask for their money back, the inability to liquidate those long-term investments and actually pay that back, that's what actually led to the entire collapse of SVB.
So, coming to India, what does this mean for, what is the exposure of Indian startups to the collapse, right? There's some reports that suggest that 90%, there is an estimate of 90% of Indian SaaS startups banking exclusively with SVB. So, what do you have to say?
So SVB has a very strong relationship with India as well. They spend considerable amount of time actually coming and seeding the Indian ecosystem, meeting various investors, meeting various companies, holding various events to showcase the power of Silicon Valley Bank. And given the very close ties they have with the Valley as well as startups over there, through word of mouth as well, they actually had a fantastic premium compared to any of their peers in that regard. And we actually break down the number of companies that are Indian startups that are actually headquartered overseas or domiciled overseas. There are reports to say that up to 60% of India's 108 unicorns are actually domiciled overseas itself. If you look at Y Combinator, which is the largest technology accelerator across the entire world, they have about 250 odd companies from India, and Y Combinator is a precondition. Requires these companies to re-domicile to the US, and a large number of them actually end up banking with SVB itself. They look at the SaaS companies also. As per a recent report by parent company, India has about 1,600 SaaS companies of a certain size. The majority of them, because of the ability to actually make and receive payments in dollars, because the US is still the largest SaaS market and the funder of SaaS as well. A number of these companies choose to actually domicile overseas. So when you actually run all these numbers together, about 1,500 to 1,600 of India's companies that you can think of from these sectors itself are actually domiciled overseas. If you look at fintech, you look at logistics, you look at any of the other areas, even e-commerce for that matter, so a large number of these companies are actually domiciled overseas and not domiciled in India itself. Now, the majority of them I already do bank with Silicon Valley Bank also. So I would wager that close to about 1,200 to 1,250 Indian companies actually have exposure to the particular bank, and that exposure would be anywhere within range about $2.5 to $3 billion on a gross amount itself. So all that money was actually locked up on Friday. I believe as of Monday, as of now, they do have access to their deposits, and most of these founders and these companies are actually looking to move their deposits to another bank, most probably one of the banks that are far too big to fail. Because in that large size actually comes security, I think, is actually the need of the hour right now, given how frayed nerves are across the entire board.
So, I have a very basic question for somebody who doesn't, cover business as such. Why do these companies, domicile overseas? What is their incentive to domicile in the US?
I think so. The domicile is a fairly personal choice. Also, I think I know a large number of people, and this is a belief that was actually very prevalent in the Indian startup ecosystem, is that everybody thought that if you domicile in the US, you'll instantly be treated as a US company, regardless of the fact that the entire business, the entire team, the entire management, everyone actually sits in India. They thought that domicile actually constituted dollars, and that's a false equivalence that's actually been dismantled over a substantial period of time. Now, look at the US. The US is one of the largest funders of startups across the entire world. And the thing about capital is, even though capital can actually take execution risk, when it comes to legal risk for that matter, they actually prefer to be governed by US law, because they are more comfortable with US law. It's easier for them to litigate when it comes to that. There's more clarity in terms of the courts, everything, etc. So a number of these investors encourage their companies to end up redomiciling to the US and say that in case you actually do it here, it's easier for us to fund you. It's much easier for you to raise capital as well because the US has a larger number of investors, and you'll be much closer to your home market also. If you look at the SaaS market as well, the US is the largest SaaS market in the entire world by far. So the ability to actually be closer to your customers and give them that confidence that they're transacting with the US business is another reason why these companies are choosing to domicile to the US also. Then there are operational issues that actually do come about as well, especially in the world of SaaS. Everyone actually transacts in terms of USD. No one actually waits, sends an invoice manually, waits for the payment to happen. Everything happens through auto debits to payment gateways. So, like how you have it with all your subscriptions, they actually tell you on, let's say, the 8th of the month or the 9th of the month, I'm going to debit X number of dollars for the services you used in the previous month itself. So, the moment you start having that kind of cadence as of now, it became impossibly hard for them to do business in India because there are a whole host of RBI regulations that prevent these sort of automatic debits and credits of foreign currency to Indian bank accounts, especially through a payment gateway. If you set up in the US, a US bank doesn't actually suffer these sort of deficiencies. They look at it from an M&A perspective or an exit perspective also. Under the US regulation, you can actually have mergers and acquisitions happen on a tax-free basis, provided you actually just follow simple tests like continuity of business. You have to continue the same business line for a certain period of time after you go to the M&A. Continuity of interest. A majority of the shareholders prior to the M&A continue to be shareholders thereafter. And there has to be a business reason why you actually did the M&A, not just for harvesting tax losses or anything. You need to actually justify that. So long as you have this, your ability to actually go through the M&A on a tax-free basis objectively does exist. Whereas contrast that in India, all M&A needs to be sanctioned by the NCLT, which ends up taking anywhere between 12 to 18 months, which is a substantial period of time in the life of a startup itself. So these are, in terms of ESOP taxation also, US has a far more beneficial ESOP taxation than what India has as of now. And these are some of the reasons why, and ESOPs, especially for tech companies and startups, are exceptionally important. So these are some of the reasons why these companies have actually chosen to domicile overseas. And of course, listing on the NASDAQ or on the NYSE. I think the listing story is something that's been dismantled rather brutally as of now, because the US is such a large market that in case the rule of thumb that they have is in case your market cap is less than the quarterly profit of Alphabet or Amazon or Meta for that matter, there's no point actually listing in the US exchange itself. Even companies as large as 5 to 10 billion are considered small in that particular market, but 5 to 10 billion in India would actually be a very, very large company in that regard also. So there is a shift that's actually happening of founders who want to move back to India. PhonePe is actually moved back from Singapore to India as well. They paid a very heavy tax bill for that. So the intention does actually exist for these companies to move back. And I think the SVB collapse has contributed dramatically to that. Everyone's trying to figure out a tax-free path to end up moving back to India. And the Indian government opens a scheme in this regard. I'm very confident that a number of these companies who flipped overseas will actually look to redomicile to India as India solves some of these operational issues also for these particular companies.
Yeah, so actually that brings me to what is the impact, short term and long term, of these companies withdrawing their deposits. What do you believe is the short term and long term impact of this?
Yeah, I think the short term impact is that the current management of SVB is also going to find it very hard to actually continue business as usual. I think they're going to be more concentrated, even unless an acquirer actually comes in and backstops the losses, guarantees all the deposit that's going to be there, calms down all the depositors of SVB. For that matter, I think SVB is going to see a fairly slow collapse where everyone's going to move money out in the immediate short term itself. Number two, I think even from a round of funding perspective also, a large number of investors are going to start paying attention to the bank relations that these companies have. They want to make sure that they actually bank with one of the very large banks that's not under any risk of actually going under, to make sure that there's security that actually comes in the operating and the banking transactions for these particular companies also. The third thing I think is also important is number of the companies looking to shift overseas, especially from India, who don't have an economic or commercial rationale to actually have a US office. They're doing it because it's trendy, or someone asked them to, or someone said, I'll give you like a $500K or a $1 million check as well. They may not actually take that particular plunge. Most of them may want to end up exploring another geography or stay back in India itself. So I think this is what's going to happen as of now. From an investing perspective, I think once all investors get all their money out of SVB and there's a couple of weeks of a calm that happens, it will actually go back to business as usual. Because of the fact that the Fed and the FDIC stepped in and actually said that we will ensure that all the depositors get 100% their money back. That went a long way in calming nerves. If in case they didn't do that and money was actually locked up, I will be having an entirely different conversation as of now.
So, what do you think the lessons that India should draw, both the banking sector and the government? You spoke about companies moving back to India. So, do you think that India can really cash in on this? Yes, your thoughts.
Yeah, I think India. So the RBI is amongst the most conservative regulators in the world as well. This is something. This is something that's also fairly known. But I think in this particular regard, the RBI should seriously scrutinize why are Indian companies looking to actually move overseas. If you look at the economic survey that was actually tabled one day before the budget as well on January 31st, the economic survey also spoke about the fact that externalization of flipping is genuinely hampering the success of startup India, and the government needs to look at certain measures to end up understanding why these companies move overseas and end up actually bringing them back. So I think rather than actually looking at strengthening banking infrastructure, India's banking infrastructure is fairly strong already. We have very strict investment norms that prevent us from taking short-term deposits and actually investing in them into such long-term instruments. The investment policy, the treasury management of a bank, their policies end up being far more stringent compared to what you see in the US, even from an accounting standpoint also. So rather looking at strengthening these, which are already strong, let's actually look at the weakness in terms of the operational inefficiency that is actually causing startups to move overseas. Examine that particular aspect and actually end up improving that. Then some of these operational reasons why startups choose to move overseas ends up actually going away. And in case a situation like this does actually arise anywhere else in the world, the impact on Indian startups is actually going to end up being minimal, fairly minimal. And I think that is something we should actually end up aspiring to also. I think if that actually happens, this will be a fantastic opportunity for India to actually succeed from the collapse of SVB, which is unfortunate. And in case we don't actually learn these particular lessons, then this thing will just be another footnote in the history of Indian startups where people just say this happened. It happened on a Friday. It got resolved on a Sunday. It's not the largest crisis if we compare it to some of the other crises that actually seen affect startup India over the last couple of years.
So my final question is: you spoke about obviously the Fed stepping in and sort of calming the nerves, but obviously there is panic all around anyway. So do you think that is this the start of a banking crisis? Could this trigger another global financial crisis like we saw, back in 2008?
Yeah. I think so. Confidence in banks is actually fairly low right now. I think crypto actually jumped up, I think, about 17 or 18% last year itself. And it's a very interesting relationship. Every time the banks rise, crypto falls. Every time crypto falls, the banks rise, and vice versa. Sort of inverse correlation between them. I think, but the fact that, the aggressiveness of the Fed in terms of hiking the interest rates have genuinely wrecked the balance sheet of some of the smaller banks that are there in the US, especially for that matter. SVB, I think, was the 16th largest, but there are a number of banks smaller than them that actually face similar kind of issues. And if there was a run on any of these banks, even if 1 or 2% of the depositors came in at one point asking to end up, 5 to 6% depositors came in at one point asking for their money back, their balance sheets may actually be under considerable stress. I don't think that a situation similar to 2008 in that regard, because 2008 was mass panic. This was SVB is unique in a bank because a large chunk of the entire depositor base is concentrated in one industry, which is startups. For that matter, startups have been facing headwind for a considerable amount of time. You look at the other banks; they're fairly diversified in the deposit base also, and I don't actually see the kind of stress across the entire piece. I think there is a crisis of confidence that's there as of now, and depending on how they resolve the crisis of confidence, a large number of bank stocks in the US, especially First Republic and a few others, ended up crashing to a large amount last year. Even the trading in the stock was actually suspended. So I think getting that confidence back will actually ensure that these doesn't actually snowball into an overall collapse. I think the fact that the Fed actually stepped in for SVB and they said that they are actually enhancing the deposit insurance across everyone to make sure if any bank falls, depositors get their money back. They're doing a lot of work to actually allay the concerns of the market itself. So I think if this actually continues and they actually take a pause or relook at their aggressive interest rate hike policy, that will actually go along with diffusing the tension that's inherent in the system. But if they do continue down that particular way, I think if 1 or 2 banks also end up going down the similar way, confidence will be at an all-time low, and this particular issue will actually continue for the near to mid future as well, as opposed to just concluding during this particular week itself.
All right. Thank you so much, Siddarth, for really breaking down the collapse of SVB for us and for putting all of this into perspective about the startup sector here in India. Thanks once again, and really appreciate you taking the time out to speak to us.
Likewise. Thank you very much.
Thank you. Bye.